In this video, I'm going to be discussing, is Forex trading even worth it with all of the ups, the downs, the emotional side, the stress, the screen time, and depending on what your returns are, can we beat it in a much easier way that's less stress, less screen time, allowing you to enjoy your life rather than focusing on so much around economics. Let's explore the ups and downs of the markets and how we can generate the best return on our portfolio. I'm also going to be giving access to 10 lucky individuals to join me in my weekly market breakdown classes, where we break down exactly what we're looking for in the markets, what our outlook is, and what our expectations are. So stay tuned. Setting expectations in Forex trading is super important. Let's be honest, if you're completely new to Forex trading, I'm pretty certain that you're going to have losses. With a large amount of retail traders losing on a frequent basis in Forex, it's a hard place to start in trading. Initially, my background started within private banking. I started my stock trading, investing, and then I moved more fast-paced into Forex. A lot of people in this day and age are going straight for Forex, straight for crypto, which at this moment in time is high reward, high risk, high volatility. So what I want to break down here is it worth getting involved in Forex trading? Let's look at historical gains on my performance over the past years of my trading career. Majority of my trading has always been done via algorithmic trading that I created back in 2015, 2016, where I created Fusion, then Fusion 2, and now Fusion 3.0. I created Beast Mode with Elliot as well, the UK Managing Director at Samuel & Co Trading. And a lot of these automated algorithms are what does the day-to-day activity for me in trading. I still do trade manually, however, it's a lot less than what my automated algos do. It gives me more free time as well. So let's have a look at what my performance is to set some sort of expectations over a 4 or 5 year horizon for yourself. So trading manually on Forex, to set expectation, I would say if you're achieving a 4% month, you're doing amazing. Now, let's be honest, I don't think most traders will achieve that every single month. I'm going to say they can achieve it 2 out of 3 months. So that means, achieving in the region of 12% over a quarter. Don't forget, this is utilizing leverage of 1 to 3 and above, and that's an important factor to take into account. Without leverage, your gains would be a lot lower. Now, when we utilize something like Fusion, you can see on my screen here my performance since Jan 2020. So overall, we have the data here over 49 months. I didn't trade in January, completely turned it off, wasn't for me. So over 49 months, we have achieved 182% gain. So as you can imagine, I've been doing this for well over 12 years since I started. The average gain over the 49 months is 3.7%. Now, when you think about that, that's over a large amount of data. So that's setting expectations for someone that sits here with bloodshot panda eyes all day long behind the same trading desk, trading, filming content on the markets. So let's just put that into perspective from a screen time and how much time I sit here to be able to trade. All the economic indicators that I'm reading, the forecasts from the banks, how the overall forecasting for pound dollar, euro dollar, and the overall market is going to look. These are things that I'm looking at constantly every single day. So I'm here to tell you that you could get similar results without the screen time, without the stress. There's actually a lot more simpler for you that allows you to focus your life in other areas. And I wanted to highlight this because I think that some people go out there with the expectation that you must trade Forex in order to get good gains within the markets. Now, ultimately, you have property opportunities with companies like TAP, where you can achieve over 9% per annum. You have ETFs out there that can achieve well over 10 to 15% per annum as well. So it all comes down to what gains do you want in the market and what is realistic. And also, with Fusion 3.0 coming out, there's a link in the description where you can enter into a raffle for just £1, and you might be able to be a winner and winning Fusion 3.0. There's going to be 10 winners selected in April. So stay tuned if you fancy your luck at winning our £3,000 product. Then check the link in the description. I'm a big believer in less screen time, more lifestyle. having more fun to be able to do things that you want to do. And ultimately, when you're an intraday trader at Forex, let's just be honest, you sacrifice 10 years just like I have to be able to achieve a 3.7% per monthly return. But there are easier ways of doing it, and there are some fantastic, well-diversified, tested methods such as ETFs, exchange traded funds. So I'm going to be focused on the Vanguard FTSE All World ETF, which is heavily diversified, which is very important to a successful portfolio. This ETF has over 3,600 holdings within that one ETF. Now that is what I call diversification. Having exposure to multiple continents, a vast amount of countries, allows for the overall performance to grow. You are diversified from the UK to China, from the US to Asia to Japan. We have all of these different countries from a diversification perspective, but then on top of that, we also have the diversification through sectors, from technology, finance, retail, you name it. We have that diversification within this ETF. So that reduces our risk if we was to invest into a specific stock, and we don't want to have that risk with all of our money weighted on one company's performance. With this, we have our weighting across the globe, across different countries, across a vast amount of sectors, and that is one of the best ways to be diversified within the markets. So we're on the overview here of our Vanguard FTSE All World ETF distributing. That is the important factor here of what we're looking at. So let's break it down a little bit further. It basically seeks to track the FTSE All World Index. The FTSE All World Index tracks stocks from developed and emerging countries worldwide. So you've got to remember as well, when you invest into an ETF, it's very simple. You go onto your brokerage platform, you search for the Vanguard ETF. Now, when we look at the gains here, you can see that to date, that this ETF is nearly up 290%. That's a staggering gain, to think that you've pressed a button, clicked buy, and left it. Now, if you invested in this when it launched back in May 2012, all the way from 2012 to now, you would be up 289%. That's fantastic. So in that time frame from 2012 to now, you had achieved over 24% per annum on average. And this just goes to show that patience and time in the market allows for growth. And with that vast diversification here, it's very hard for you to not make money in the long run. It's just a matter of how much. But 24% on an average basis, based on the data that we're looking at from this Vanguard ETF, is very impressive. One of the things I want to highlight about this ETF that you may have noticed is that it's distributing, which means that when a dividend within one of those companies is paid out, it gets paid out to the holder quarterly. Now that's a fantastic aspect. So that means that even though you're invested, when a dividend gets paid out, you get money in your bank from those companies through your holding in the ETF. So when we look at this from a diversification perspective, let's look at it from a country region. You can see that we've got 57.8% here in the United States, over 6% in Japan, 3.3% UK, Switzerland 2.6%, France 2.3%, China 2.33%, and the list really goes on. You can see how diversified it is to developed countries and also emerging markets. So now let's look at the top 10 holdings and the distribution across 3,643 companies. So we've got 4% going towards Microsoft, 3.9% on Apple, 2.1% on Nvidia, 2% on Amazon. Then we've got Meta, Alphabet, aka Google. We've got Eli Lilly and Co, Tesla, Broadcom. So those are the main holdings. And you can see the distribution here from sectors. It is heavily diversified. Technology, 24%. Financials, 14%. Consumer discretionary, 10%. Healthcare, 10%. Others is 40%. We can have a look a bit further. Telecoms, 7.18%. Consumer staples, 6%. Energy, basic materials. So you can see how well diversified you are within this. Now, if you wanted to break this down from a returns on a year on year, year to date, 1 month, 3 months, 6 months, let's explore that because it's important to see what those gains could equate to. So in just 1 month, you would have actually made 2.32%. In comparison to me, where I'm trading with Fusion, it was 3.7% in 1 month. 3 months though, 9.61%. 6 months, 10.59. 1 year, 18.26. 3 years, 33%. 5 years, 77%. Since inception, 268%. Now, when we talk about averages over that time frame, there are periods where you have down years. You can see here that 2023 was 17.7%, 2022 minus 13%, 2021 plus 28%, 2020 plus 6%. So you can see what those gains look like on a year by year basis. And you can see that the current dividend yield is currently 1.63%. So you can see what you're looking to achieve with those dividends. And you can see how the dividends vary from year over year. Now, when we talk about risk, let's just highlight that. Within Forex, it's around 70% of retail traders lose their money. So let's look at what is the risk of investing into an ETF like this with Vanguard. So the volatility is measured over 1 year, 3 years, and 5 years. The annualized volatility reflects the degree of price fluctuations during 1 year period. The higher the volatility, the more significant the price of the asset has changed in the past. Assets with higher volatility are generally considered more risky, aka Forex. However, let's have a look at this. So risk overview, volatility at 10%, 3 years 13%, 5 years 16%. And don't forget, this is going through the COVID year as well. So you can look at maximum drawdown periods. Now this is very interesting to compare this against Fusion. So maximum drawdown 1 year, minus 6%. Maximum drawdown over 3 years, minus 16%. Maximum drawdown over 5 years, 33.47%. So that again is obviously going to be during this period here where we saw the volatility coming through with COVID. Naturally so, the whole world went on a freeze. So if we flick back to have a look at Fusion's drawdown, 34.09%. So in comparison, this ETF has lower drawdown and overall the gains are still very good. Let's just highlight that. Don't forget, Fusion only trades pound against the US dollar. I'm just being honest, it trades one instrument, whereas this is trading over 3,600 companies. So heavily diversified. So when we look at this and we break it down, don't forget, when you invest into an ETF, whether it be a one-off lump sum, whether it be monthly, quarterly, biannually, however you do that, you don't actually have any screen time. You're using the common sense knowledge here that you are diversifying in over 3,000 plus companies, and you're clicking a button. You theoretically shouldn't have any stress, because ultimately, if you're down on your money, it means the overall economy, global economy, is down as well. And ultimately, they are going to naturally turn around and start performing. After all, this is a global economy. It's just time within the markets. So theoretically, you have no screen time except for clicking that button, or you may have set it up on a direct debit and have no screen time whatsoever. In comparison to you manually trading Forex, where it could be potentially high stress, high reward, all the ups and downs and the emotional side to it. So there's a lot of different factors here. I think overall a healthy balance is to utilize something like this to get started in trading, where it's easy, it's reliable, and you can see how the ETF is performing. If you definitely do want to dip your toes into Forex, then do it in a structured learning environment and take the pathway very slowly. It's about doing it in an environment where you don't lose large amounts of money, and you do that in a stable manner. If you are interested in joining me on my weekly lessons, of where I do break down the stock markets, ETFs like this, and also the foreign exchange markets of what I'm looking to trade for the upcoming week, then 10 lucky individuals will be selected on the link below, and I'll be seeing you at Thursday 6 p.m. If you've enjoyed this breakdown video of comparing Forex to investing into ETFs, then make sure we click that like and subscribe button.